Hey there, my name's Carson Thrasher. This is my stock project for finance. The company I chose is Acushnet Holdings Corp., which is a golf company. Um, they're a parent company of a couple of large golf brands such as Titleist and FootJoy mainly. Um, Titleist is mainly known for their golf clubs and golf balls, and FootJoy is mainly clothing and accessories. They're mainly known for their shoes. Um, the company, as you can see in this business description right here, is engaged in the design, development, manufacturing, and distribution of these golf products, which is pretty cool considering how much work is into designing a lot of these, uh, products. Um, as seen right here, um, some of the products they offer through these different brands, such as Titleist, FootJoy, Scotty Cameron, which is a brand of putters that is kind of under Titleist, Vokey Design, which is a brand of wedges, also under Titleist, Pinnacle, which is a golf ball brand, and Kju's. Um, it says that the company's most reportable segments are the Titleist golf equipment and the FootJoy golfwear, which is not very surprising as they are two of the largest names in golf. Um, and geographically, they mainly serve the United States, Europe, and then Middle East and Asia, which is not surprising, is the U.S., Europe, and pretty much Japan are kind of the three top spots to golf in the world. Um, uh, One interesting fact about Acushnet is that they were funded in 1910, which is pretty crazy considering how old of a brand that is, being over 100 years. And as of 2024, they ended the year with around 7,300 employees, which is pretty impressive considering the scale at which they produce golf gear and clothing and whatnot. Speaking of employees, we're going to move down to their executives. Um, Morningstar has 10 executives listed here on their website, with uh, four of the 10 being with Acushnet for longer than 6 to 7 years, which is pretty impressive um, considering how much turnover there can be in some of these huge brands. Um, David Mayer is one of those people there. He's their president and CEO. Um, Stephen Pulisic is their president of Titleist Golf Clubs. Mary Louise Bond is the president of Titleist Golf Balls. And Christopher Aaron Linder is the president of FootJoy. Um, it's pretty impressive to see executives stick around for this long, and I can't really blame them when you see how much that their executives are making, which doesn't really surprise me considering how expensive golf is as a hobby and sport. Um, Next, we're going to move on to the company overview. Acushnet has an equity style of small blend. They're in the sector of consumer cyclical, and their industry is leisure, which makes sense because they are a golf brand. Um, their day to year and year ranges of prices are not very surprising considering that over the past probably 10 years, they've been very consistent about um, their pricing, and kind of just their stocks haven't changed too much. They've just grown very, very steadily. Their market cap is a little over $4 billion, which is pretty impressive. Um, and the other ratios that I found pretty interesting from this overview were the price per sales, which was 1.75, price per book of 5.33, and most importantly, their price per earnings of $20.09. They have a forward dividend yield of 1.39 and a trailing dividend yield of 1.3%. Now moving into the summary of their company. Um, According to Morningstar, it seems that Cushnet, as of today, is slightly undervalued, but well, at least in terms of their price to their fair value, which isn't a huge deal, obviously, because that's just a day-to-day price. But it is definitely a fair price. Um, although it's not seen in this graph, this is a day-to-day basis. Um, their price has grown very steadily, not very significantly, but definitely very steadily over the past 5 to 10 years. And it makes sense because golf is an industry that's mainly dominated by a couple of very, very big brands, um, including Titleist and FootJoy under Acushnet. And there's brands like Callaway, TaylorMade, and a couple of others. But those are kind of the big three typically. There's also brands like Ping and Srixon, which are also some very large brands, but those are typically the main three players. Um, in terms of comparables to other brands in the golf world, um, although Acushnet does have a couple of brands kind of accompanied inside of their company, they are performing better than most of their competitors, as you can see here. Um, all of these other brands are undervalued, which is kind of a interesting sign since only Acushnet is said to be fairly valued. But in terms of pricing, Acushnet's valued higher than TWC and BML, which is mainly golf clothes, but they are um, they're much lower than Zibo, which is a Japanese company, which like I said earlier, kind of makes sense because uh, America, Western Europe, and then Japan are kind of the three biggest golf markets in the world. Um, but one thing that is very interesting that I saw as well is that although Acushnet doesn't have the highest price of these competitors, they're the only company that has a low uncertainty rating, with their only person on this list beating them having a medium uncertainty level, and the two companies lower than them having a high uncertainty level. Um, Also, their market cap, although it's $4.11 billion is a lot, um, it is significantly more pretty proportional to these other numbers. So I'd say that's pretty um, accurate. And their risk rating is much better than these other two companies when you think about how the stock's fairly valued and their uncertainty so low. Um, According to Morningstar, you can kind of see through any of these sort of analysis of Acushnet that it's a very safe stock, but it's not a stock you necessarily want to invest in. It's kind of hard to invest in a stock where the price does stay as steady as it has for Acushnet because you're guaranteed to make some money pretty much, but you're not going to make much if you do sell your stocks, which is good and bad. You can generate a profit, but the profit's not necessarily worth it. Um, um, sorry. Um, they have a 3-star rating um, in terms of uh, you know, just how they're valued, which is a good thing. It shows that they're fairly valued. So I do think these stocks are a safe bet, but not necessarily one I would want to invest in. Um, Next, we're going to move on to the price versus value section. Um, like I said earlier, Cushnet has stayed very consistent with their growth, and have always sort of remained fairly valued, or maybe like a little bit overvalued, but nothing significant. Um, Over the past 4 to 5 years, you can see their growth's kind of remained stagnant with a few like drop offs in 2024, but that would mainly be attributed to like seasonal kind of stuff, like time of year. You can kind of see that here with, this is probably winter months right here, or going into the spring, just ending out the 2024 winter, and then here getting ready to move into 2025 winter. And that trend can kind of be seen across all of these years, which does make sense because golf is a warm weather sport. Um, in terms of sustainability, um, the risk rating that Morningstar has given to Cushnet is 4 out of 5. So, they are a very safe company to bet at or bet on or put your money into for their stocks. Um, they've got a very low risk rating, not necessarily negligible, but it is uh, very safe to bet on them to make you some money to some degree. And their controversy level is one, which is the lowest. So that's a very good thing to see if you're trying to invest in them. Uh, Next is the trailing returns. There we go. As you can see right here, um, over the past couple of years, they've done very well, especially compared to the industry. If you look at the 3 year mark, which can kind of show you the end of COVID and how, although Acushnet did take a hit during COVID, they were able to still kind of remain a top dog in the golf scene, which is really important considering how much of a hit sports as a whole took, but especially golf during COVID. Um, in terms of the 1 month, 3 month sort of span, the 3 month negative number here can be seen as pretty much just the winter months, so that doesn't surprise me too much on the returns being low, and it is a little higher than the index, but I don't think that'd be anything to worry about. Um, in the past month alone, they've been higher than the industry and the index, especially higher than the industry, which is a really good thing to see considering that like it is getting warmer, but not significantly warmer. So although the golf season's sort of kind of starting to get back to where it usually is, um, the industry as a whole is still not doing as well as Cushnet is. And for the 1 day returns, you can kind of see that Cushnet's not done as well as the industry has today. But in terms of the index, they're still doing better. So I also don't think that's too much of a thing to worry about. Um, here. So to start with the growth, I really think that you can kind of see the same like steady increase in growth for the most part. For Acushnet, they've really done a good job of being able to grow their stock price consistently without, you know, growing so fast that they can't handle the growth or dropping off and declining in stock price because they're not doing as well. Um, which kind of makes sense because if you're, one of the top three brands in a market that's as dominated by only a couple brands as golf is, it's a good thing to see that they're performing as well as they are. Um, so, like I said, in terms of growth, you can see that that's been kind of steady. Their profitability has been pretty great for them personally, which makes sense with the great asset return ratio and equity ratio. And the return on invested capital ratios are great across all the years, especially good in 2024. They do have pretty high days in inventory numbers, but that's not really surprising because, compared to other manufacturing companies, golf companies have, more expensive items that are, they're not just going to fly off the shelves like, like a food and beverage industry might expect them to. Um, their industry turnover, however, though, is pretty solid, so it kind of shows you the relationship there. Moving on to their financial health ratios, these are all also very good, which doesn't really surprise me just because, they are such a consistent brand in terms of what they've done financially. There's not really too much surprising or anything that jumps out here. You can kind of see like small hits during COVID kind of affected them, with 2022 being the worst year for most golf brands, but especially Acushnet taking large hits in 2022, but nothing too crazy that they couldn't deal with, obviously. Um, Next, I want to move on to their financial statements, starting with the income statement. Um, the main points of the income statement that I found interesting are the gross profit numbers, which, as you can see across these couple of years, they have really, shown the growth they've made in terms of, you know, the like just, the cost and total cost or the revenue they make and the cost it takes to generate that revenue have remained pretty consistent with their growth, which makes sense considering that you'd expect to make more money, but also spend more money if your stock price is going up. Um, the gross profit has gone up significantly since before the pandemic, which I found interesting. Especially comparing 2024 to 2018. It's a very interesting thing to see how much they've grown. And that can kind of be attributed to how many people started playing golf uh, during and after COVID. But that was probably the most interesting thing I found on the income statement. Um, Another thing I found that was interesting was the increase, the significant increase in the non-controlling minority interests that Acushnet has. This number really surprised me because it's been negative for literally every year you can see on Morningstar until 2024, where it not only became a positive number, but really jumped to 12 from just below zero. But that's a very significant um, jump in minority interest, which is something I just found a little interesting. Next, moving on to the balance sheet. Um, the main thing I found interesting here was the drop off in equity. Um, although it's not significantly higher than, say, 2016, it really kind of did sort of like a wave, you could say, of growth into 2020 and 2021, and then began to drop back off again. Um, and it can also be seen in some of these other numbers here, but I just found that to be the most interesting thing. And next are the cash flows. Um, the cash flows are something I found, uh, you know, it was pretty interesting just to see how much they spent on financing activities, um, especially because you have this drop off from 2021 to 2022 because of COVID. And then the growth from 2022 to 2023 really surprised me with how much they kind of shot back after the pandemic started to end. Um, with this number in 2023 being just about 33 times higher than 2022. Um, and, it was kind of interesting to see it level off as well from 2023 to 2024 because that's a drop off, nearly $100 million. And, that's, well, I guess it'd be 100 billion, but still a pretty interesting thing to see. Um, Lastly, we're going to move on to the dividends. Um, this is one of the more confusing parts of Acushnet for me because although they've grown gradually, but not necessarily significantly, you can kind of see that, they had growth in their trailing dividend yield up until 2019, and then it's kind of, dropped off a little right as the pandemic hit, and then sort of remained stagnant through the last 2 years. Um, but what has grown and then stayed very stagnant was the dividend per share, which has not been proportional to the trailing dividend yield, which is a pretty good sign for investors because it shows kind of how the value of your dividends has kind of grown or how much you should expect to make from your dividends has grown, um, which is obviously a good thing to see if you're an investor. Um, but in conclusion, I'd say that if I was an owner of a Acushnet stock, I would sell it, um, mainly just because the profitability of a Acushnet stock is not very high. Like I've said a couple of times this video, I mean, you can make money if you invest in them, but you shouldn't expect to make huge profits. And if I was thinking about buying a Acushnet, I'd probably put my money elsewhere just because I feel like there's, probably hundreds of companies that are um, much safer to, generate a larger profit. Um, but that's pretty much all I've got for this project. Thank you.